Hi, I'm Bob Coleman. Welcome to Week 5 Office Hours, SBA 7A Loan Documentation. We have a couple questions here. If you have any that have come to mind while you've been waiting for us to come on, feel free to do it. You can do it to the chat box on the GoTo webinar dashboard, or you can send an email to joseph@colemanreport.com. But first, let's start with some questions. Lance, what's our first question?
Well, we have some poll questions. Are they going to come up on the screen, Bob?
Hopefully they do.
Just wanted to know how many of you out there are SBA Express Lenders. Just a yes/no response. Just was curious. It's a great lending program. I would highly encourage you to participate, but just curious, out of this population, how many of you are Express Lenders?
1/3 are, 2/3 are not, Lance.
For the 2/3 that are not, if you have any questions about Express Lending or would like to know how to get involved, make sure and send an email to me and I'll be happy to help you out.
Question number 2, when making a loan to an approved franchise, do you regularly document the file with an executed franchise agreement? Yes or no?
Bob, that was kind of a loaded question. When documenting your origination file, when you close the loan, the SOP indicates that you're supposed to have an executed franchise agreement. When reviewing files for banks across the country, I find that at least half the time they have an unexecuted copy of the franchise agreement in the file.
And for those of you who are interested, I'm penning an article that I'm running on Monday about SBA soliciting comments about affiliation and franchises. NAGL just came out with their proposal on eliminating the franchise registry. SBA is going to take these comments under advisement. If you are interested in this topic, feel free to go and make your own comments. They're due by Tuesday, 5 o'clock Eastern, and if this is something that you want to do, feel free to participate in that. The answers are 100% of us are in the choir, Lance. We're doing it.
I hope that's true, Bob. Again, my experience in loan review, in fact, I had over the past 2 weeks, I've had about 4 franchise loans, and 2 out of 4 did not have, they had the franchise agreement, but they didn't have the actual executed franchise agreement. So I wanted to throw that one in there just to remind you, it can't just be a copy of the agreement, it needs to be executed.
Right. And I just wanted to clarify my last comments also. If SBA changes their policy with respect to franchises, remember you have to close the loans under the current SOP in on the date of that closure. So let's say these don't go into effect until January 1. If you're doing a loan on December 31st, you need to do the current rules.
That's exactly right.
Number 3, I assume there's a backstory on this. You will tell us. If you're missing SBA Form 1919, can you recreate the form for your file? Interesting question.
And there is a backstory, but I want to get the responses first.
Yeah, I honestly...
I'm a sneaky guy.
I would be very hesitant backdating and creating new forms, but we'll see what you have to say. 1/3 of us are willing to do it. 2/3 say no way.
Guess what, Bob? I'm willing to do it. There's nothing that says
on Fraud Friday, Lance.
You'll see my picture in Bob's Friday newsletter. There's nothing in the SOP that indicates that you can't recreate that form. Now, I'm not suggesting that you backdate the form.
Okay.
I'm suggesting that if you have a missing 1919, and do this while the loan is still performing, because, Bob, my experience is if you've filed a lawsuit against the obligor, they're probably not going to sign the 1919 for you. But, you know, one example, Bob, is we were doing a workout agreement with the borrower. There were 2 missing forms that were exceptions on the SBA loan. Both required the obligor's signature. One was the 1919. So we went through, had the questions answered, got the signature. We did not backdate it, Bob. We dated it the current date.
Good.
But the reason I bring that up is I've been working the last 2 weeks on a number of purchase demand kits for banks. And My preference when I send a purchase demand kit, I would prefer to have the 1919 signed the day I send the purchase demand kit in as not have it at all.
Very good. Talk to us about week 5. What's the takeaway that you want us to remember with respect to SBA 7A loan documentation?
Well, really a couple things. I think SBA lending, if you're doing delegated lending, you don't always have to use the SBA forms. SBA Express Lending is one example of that. You can use your own bank note guarantee. You do have to use the 1919 and the 1920 on the Express loan. If you're doing a GP submission, you're going to have to use all these forms we discussed during the week. The compensation agreement, I think it's kind of a gray and fuzzy area in terms of, at least in my view, there's a lot of different opinions on what you have to report. But there's some things I've seen in some Inspector General reports that don't exactly match up with the SOP. The final thing is SBA Express Lending. It's an outstanding way for you as a participant bank to provide quick SBA loans. You need to make sure you do it properly, but quicker SBA loans to your borrowers. So it's a great program.
Email question number 1. A lender and I had a discussion today about refinancing debt, page 109 of the SOP, where it talks about a reason to refinance debt being because a debt is over-collateralized based on SBA's collateral requirements. Do you have a good example of when this would be appropriate?
Actually, Bob, I had a loan that I did as a banker, an SBA loan. A different bank had financed $75,000 worth of equipment, and they did not like equipment as collateral, as most banks don't. So they took a $500,000 piece of commercial real estate that was free and clear. They took a first mortgage on that and gave the borrower a 5-year term on that equipment. I refinanced the loan under, and I didn't do it express because it was equipment. I wanted the 75% guarantee, but I refinanced the loan with the 75% SBA guarantee, only took the equipment as collateral, and did it on a 7-year term. There are a number of circumstances where you may have a borrower that comes in and the bank that they borrowed money from asks for all available collateral when it was not necessary. So that's just an example. The most typical scenario is when a bank takes a substantial piece of real estate as collateral on a smaller loan.
Email question number 2. We have an SBA loan and there was a commercial real estate agent broker that received a commission on the sale of the property. Does this commission have to be reported on SBA Form 150, the compensation agreement?
You know, Bob, that was one that was covered in that recent OIG report. It's kind of interesting. The SOP is pretty clear on this. The answer is no. But there was an Inspector General's report that questioned why a brokerage fee was not included on the Form 159. My answer to it is a real estate commission does not have to be reported. The SOP is very clear. Where it gets a little gray sometimes are business brokerage commissions. There's some gray area there, and I certainly would want to take a close look at the SOP section on that. I don't think you have to report it.
You referenced the Inspector General report. The reason why the Inspector General had criticized the bank and they did deny the guarantee, not for that reason. That was a sub.
Yeah, that was certainly not the reason for the denial, but the Inspector General did include it in their report, and I found that kind of interesting, Bob, because the SOP is pretty clear. Real estate commissions and brokerage fees do not have to be reported.
What the Inspector General said in this case is that the agent represented both the buyer and the seller, took 2 commissions. The Inspector General thought that that was unusual enough that it should have been reported. As you said, it's nowhere in the SOP. I think the takeaway is when you have an unusual situation, stop and take a look. There's certainly no harm in over-disclosing, but you're right. In terms of a pure real estate commission, the answer is no. Question.
Bob, I agree with you 100%. If you look at a real estate commission and it's unusual enough to cause you to pause, then what's it going to hurt to report it? I mean, it's just over documentation.
Question on prudent lending pertaining to lender's senior position on commercial real estate to SBA's junior lien position. Are there any restrictions on a lender with a senior lien mortgage when SBA has the junior lien on the commercial real estate?
Typically not, but you need to pay attention to lender preference. And there are more issues that occur, and this is a closer training, but there are more issues to be aware of when you get to a point of servicing and liquidation related to that type of scenario than there is in closing loans.
Great. The next question, the borrower wants a new non-SBA loan using the same commercial real estate. If the original debt that was supported by the senior mortgage is paid down so that the original mortgage amount can still cover this new non-SBA loan advance, would SBA still expect the lender to file a new mortgage, or is it acceptable to document that new note is in third position behind SBA, such as a provision on the new note and the lender memo to the SBA loan file?
I think you're perfectly okay to do a third mortgage loan in this situation and make sure and put a good, thorough memorandum and have a provision on the new note. But I'm not real sure I would redo the first mortgage in this situation if the bank feels comfortable in that third mortgage position now.
Lance, we know the 912, these are questions that were submitted, thank you very much. Under what circumstances can a PLP lender clear a 912 today?
Well, basically the answer is if it's a non-felony offense, misdemeanors typically can be cleared by a delegated lender, but if there's a felony, stop, because they can only be cleared by the SBA.
Submitted question number 2. Where can a PLP lender obtain a Form FD-258 for fingerprint live scan? I have a customer who would like to do the live scan, however, has requested that we provide them with this form. Any idea?
Bob, I used to get them at the police department. I usually don't like going to the police department, but you should be able to go online and just put that FD-258 in there, and you should be able to find it online, but they have them at the police department.
Yeah, I recently did this a couple years ago. We had a foster child who was visiting us, and we all had to be fingerprinted. There's now private companies that do that. I think if you contact a private company, they'll take care of you as well.
Bob, real quick funny story. When I was 21 years old and finished my MBA, my first job out of college was with the FDIC. And I had to get fingerprints, and I go to my local sheriff where I grew up, and he told me he could only fingerprint me inside a jail cell. He was just messing with me, Bob. He had me go inside the jail cell, he shut the door, smiled and laughed, and walked out the door, and I'm thinking, oh goodness.
So the takeaway is you do not have to go into a cell.
No, you do not have to go into a jail cell for the fingerprinting.
I like this question. Is there a limit to how much a loan broker can charge for a community advantage loan, or is that similar to any other SBA loan transaction?
Well, the SOP talks about the limits on fees, and I assume they're talking about somebody that's packaging a community advantage loan. My recommendation on community advantage loans would be a structure where you charged a certain amount. Dependent, you can't do like 2%. But you need to charge a certain amount based on the size of the loan typically. You know, my experience, I set the policy in 2 different banks, Bob, and I'll just tell you what I did, and it was compliant with the SBA on any express, and community advantage and express loans have some similarities. Any loan under $25,000, I'd charge a $500 packaging fee. 25 to 50, I'd charge $750. From 50 to 100, or I'm sorry, from 50 to 250, I charge $1,000. Anything over 250, I charge $2,500.
Let's assume this is a loan broker. Lance, how much can we pay as a lender for a loan broker referral?
Well, I mean, there's a maximum limit. I tell you what, Bob, let me pull the part of the SOP that talks about fees.
Instructor.
Yeah.
My staff.
I mean, I know what the answer to the question is. There are certain percentages based, or certain amounts based on the size of the loan, up to a maximum of $30,000.
Okay, very good. We will defer that for next week. Then how's that? And one more question. One more, Lance. This is a question going back to equity injection. If a borrower would like to use their business credit card to collect points for equity injection, can we prove that the credit card has been, and we can prove the credit card has been paid off, can we use that as a valid, verified equity injection?
Wow, that is a fantastic question. I would steer away from that because you're using debt to create an equity injection, and the equity injection is supposed to be verified at the time of closing the loan, and you would not be able to verify it until the person paid it off. I mean, I suppose you could do that, Bob, but it's a really gray area that I would recommend staying away from.
And the good news is we know that SBA is looking at specifically credit card debt for refinancing, and they are promised new regulations that will be coming out supposedly in the next 30 days. So this answer may very well change in the near future.
Well, I think SBA is, in fact, looking at the 5010, and there's going to be an update very soon, and there are going to be quite a few areas that they do update and change.
Very good. Gentlemen, one more question. Hey, we appreciate the questions. Thank you very much. It shows that you're engaged, and Lance is a good resource to pick his brain from that standpoint. Can I read it off?
Can you read that, Bob? I can't see the right side of it.
It says, once the live scan has been done, fingerprinting, who should the customer have the live scan sent to? My understanding is the lender is to attach the fingerprint card to the 912. Is this correct?
That's correct. They're gonna bring it to the bank, and the bank's going to attach it to the 912 and send it to SBA.
Very good. Week 6.
Don't worry, Bob. I missed the week sometimes.
Other loan closing documents. We're going to be talking about collateral, citizenship, assignment of leases, franchises, affiliation, and insurance.
Well, I think one of the big takeaways, well, I mean, there's several, but the session on franchises and affiliation, that's become a really critical area. I had a conversation with somebody in SBA headquarters the other day, and about that OIG report that we were reading. And there are 2 or 3 primary areas they're going to start looking at. They're going to look at loans over $2 million more frequently. And if you have a loan over $2 million and there's some potential affiliation issue, it's almost a guarantee they're going to take a look at those. So understanding the rules related to franchise lending and understanding the rules related to affiliation are really important for you on the underwriting and closing side of an SBA loan, because if you do it right, you're going to take care of your special assets people down the road if they get a default on an SBA loan.
And a common.
If you do it wrong. I'm sorry?
Yeah, and I was saying, yeah, do it wrong and you have issues. I was going to say a common theme with the Inspector General when they rule on denial of guarantees is exactly what you're talking about, Lance, affiliations. And you really need to take the time to understand who all the players are, how everyone's related, and to map it out.
Absolutely.